When USDC lost its peg in 2023, many thought it was over. The panic was real. A stablecoin, meant to be a digital dollar, was suddenly worth less than $1. In the volatile world of crypto, this felt like a death sentence. But instead of fading away, USDC came back stronger. And then, it went global. Because true trust isn't built in calm times. It's forged in the storm. This is the story of how USDC transformed from a US-centric stablecoin into a foundational piece of global financial infrastructure. This is how they built an empire of trust. The crisis began with the collapse of Silicon Valley Bank. Circle, the company behind USDC, held a portion of its cash reserves there. When the bank failed, those reserves were temporarily frozen, and fear spread like wildfire. The peg broke. But what happened next was the turning point. Circle's CEO, Jeremy Allaire, didn't hide. He and his team were transparent, communicating constantly, and assuring the market that they would cover any shortfall to make every USDC holder whole. And they did. The peg was restored within days. But the incident left a permanent mark. It was a wake-up call. Circle realized that to build a truly global, trusted digital dollar, they needed to fundamentally rethink their strategy. Relying heavily on one country's banking system was a vulnerability. Trust needed borders, not limits. So, they embarked on a new mission, not just to rebuild confidence, but to build a foundation for aggressive global expansion. This wasn't about flashy marketing or chasing the latest hype cycle. It was about the slow, difficult, and often unglamorous work of building credibility, one jurisdiction at a time. The new strategy was simple: compliance first. While other projects were trying to outrun regulators, Circle decided to run towards them. They started the arduous process of getting licensed, audited, and regulated in every key financial region around the world. They knew that in the long run, the projects that work within the system, not against it, would be the ones to survive and thrive. This deliberate, painstaking approach was what would ultimately unlock the doors to the global economy. Others chased hype, Circle chased trust, and that made all the difference. The first major move was into Asia, a hotbed of digital innovation. In Singapore, a global financial hub, Circle secured a major payment institution license from the Monetary Authority of Singapore. This wasn't just a piece of paper. It was a stamp of approval from one of the world's most respected regulators. It signaled to the entire region that USDC was a legitimate, compliant, and safe digital asset. Then came Japan. Following new legislation that officially recognized stablecoins, Circle began collaborating with local partners to introduce USDC into the Japanese market. This was huge. It showed that even conservative, highly regulated economies were starting to see the potential of a trusted digital dollar. The expansion didn't stop there. In Latin America, where countries like Argentina have been battling hyperinflation and strict capital controls for decades, USDC found a powerful new use case. Local fintech startups began integrating it into their platforms, offering millions of people a way to save in a stable currency and transact globally without going through a broken banking system. For them, USDC wasn't a speculative asset, it was a financial lifeline. Even in Africa, the story was similar. Cross-border remittances are a multi-billion-dollar industry, but they're notoriously slow and expensive. USDC offered a solution. It became a bridge for families to send money home faster, cheaper, and without the friction of traditional correspondent banking. It was no longer just a token for crypto traders. It was becoming digital cash for the global economy, empowering everyday people from Buenos Aires to Nairobi. USDC was evolving from a product into a utility. But to be truly global and serve all these diverse use cases, USDC couldn't live on just one blockchain. Circle knew that the future of the internet was multi-chain, a network of interconnected blockchains, each with its own strengths. So, they began a strategic expansion onto the most promising new networks. First, they launched natively on Solana. With its lightning-fast transaction speeds and incredibly low fees, Solana was the perfect home for high-frequency DeFi and payments. USDC on Solana quickly became the backbone of its booming decentralized exchange ecosystem, enabling trades to happen in a fraction of a second for a fraction of a cent. Next came Polygon, a leading scaling solution for Ethereum. By launching on Polygon, USDC could power scalable payments for dApps and enterprises that needed to handle thousands of transactions per second without the high gas fees of the Ethereum mainnet. This opened the door for gaming, NFTs, and other mainstream applications. Then, They integrated with the next generation of layer to south, like Arbitrum and Base, Coinbase's new network. These platforms were built to bridge the gap between traditional finance and the on-chain world. With USDC available natively, it became the default source of liquidity, the stable asset that developers and institutions could rely on to build the next generation of financial products. Each new chain wasn't just a technical integration, it was an expansion into a new community. It unlocked a new audience, a new set of developers, and a whole new range of possibilities. USDC wasn't just expanding its geographical footprint, it was weaving itself into the very fabric of Web3, becoming the universal constant in a rapidly evolving digital universe. Behind all this technical and geographical expansion was a quiet, relentless campaign of partnership and policy engagement. While the code was being deployed on-chain, Circle's team was working behind the scenes, building bridges in the real world. They met with governments, central bankers, and regulators across the globe. Their message, articulated often by CEO Jeremy Allaire, was consistent. You can't build the future of global finance by operating outside the law. You build it by upgrading the law. Instead of fighting regulation, they embraced it, offering their expertise to help policymakers understand the technology and craft sensible rules that would foster innovation while protecting consumers. This collaborative approach led to groundbreaking partnerships. They began working with traditional financial giants like Visa and MasterCard, integrating USDC into their vast global networks. Imagine using a Visa card that settles transactions instantly using USDC on the back end. That future was getting closer. Simultaneously, they deepened their work in emerging markets. Governments in countries like Kenya and Brazil started exploring pilot programs for USDC-based payment systems, seeing it as a way to modernize their financial infrastructure and promote financial inclusion. Circle proved that you could be both a crypto-native company and a trusted partner to the traditional financial world. They weren't just building a product, they were building an ecosystem of trust that spanned both Web3 and Wall Street. When people say crypto is about code, the story of USDC proves it's really about something more fundamental: trust. And trust isn't something you can just announce in a white paper or program into a smart contract. It's something you earn, slowly and deliberately, through your actions, especially when things go wrong. By focusing on three core pillars: transparency, compliance, and integration, Circle did more than just save a stablecoin. They built a blueprint for how digital assets can achieve mainstream adoption. Their radical transparency about reserves, their proactive pursuit of regulation, and their commitment to a multi-chain, multi-partner ecosystem all came together to create an infrastructure of trust. They didn't just rebuild a stablecoin, they built a foundation for the next financial internet, a layer upon which a new generation of global, open, and accessible financial services could be built. The story of USDC is far from over. In many ways, it's just beginning. The real revolution in crypto isn't going to be the next 100x speculative token. It's in the quiet, reliable systems that will seamlessly power the global economy for decades to come. It's in building the things that just work. If you enjoyed this deep dive into the stories that are shaping the future of finance, make sure to hit that subscribe button and turn on notifications. Here at DCA Crypto, we turn complex crypto stories into clarity. Thanks for watching, and we'll see you in the next one.